This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Now, when a business ceases to trade, we don't get the normal capital allowances. You don't get written allowance, down allowance, you don't get AIA, you don't get first year allowance, and you don't get the written down allowance at 6%. You don't get any of it. What you do is you add in all the additions that in that period from the question, take out all the disposals, and then you work out balancing allowances and balancing charges only. So important to remember, no written down allowances, first year allowances in that final period. So there's a little question here, example number 5, which shows us how that works. What we have here is Chris ceases to trade on the 31st of March, and on that date all the plant and machinery was sold for £5,000. The written down allowance on the main pool at the beginning was £12,000 and the machinery purchased was 4. So if we have a pool, well, I mean, I'm not going to do a full computation because it just works as well with an illustration. So our brought forward figure is 12. Add in all the additions. Take out all the disposals. And that would be the balancing figure. So you would have then a balancing allowance of 11 because we haven't claimed enough allowances. So at the end of the day, the answer is nil. So that's exactly how we would do a final computation. So all those different aspects that we've looked at so far form part of this computation for capital allowances. So I'm going to do a bit of a recap and just have a look at the pro forma in full should we need to do so. Okay. So it is important, it calls it essential, to use the set pro forma for all your assets and disposals. So you list all the tax written down values brought forward on the pools and non-pool assets. Okay, copy those down. All the AIA equipment that you've bought or assets that you bought, don't forget you can't have it on cars. That's dealt with first. Any expenditure in excess of that, which you've then claimed goes into the relevant pool, either the written down allowance, the main pool for a written down allowance, or the special rate pool. Okay. Cars, make sure you put your cars in the correct column according to the emissions, and that's in the rates, so that you can just copy that out and make sure that you check that every time. Take out any sales proceeds, the lower of the sale proceeds or the costs. Deduct that and then work out any balancing adjustments if needed. Calculate all the written down allowances left to right, and then do the first year allowances on the cars. So that's your process. So that's your review. So go through the chapter again, do all the examples yourself, make sure you're fully aware of how it all works. Read through this, and then you'll see I've given you a full computation with everything in it, lots of X's, so that you can see how that works. All the various columns across the top. Put X's in, like I say. So review yourself how that works. And note that we've done special rate pool additions first, and then the main pool additions. So we've done this first and then this second. The reason is this is only entitled to 6% if it's in excess, and this is entitled to 18%, which is more. So we prefer, if we have a mixture of assets, that we use the AIA up against the ones that we're going to get the least written down allowance afterwards. Then the cars with the emissions, any disposals, all the written down allowances, and then the first year allowance. Cars at the bottom, everything nicely finished off. Okay, nicely finished off there. And let's do a full comprehensive example here of how this works. So Ling prepares accounts to the 31st of March. The written down allowance on the main pool was 30,000, and there was a car in a private use column of 14,000, which she uses 20% of the time. In the year ended 31st of March 24, we bought, let's make sure all the dates are within that period, so there's nothing that's going to throw us that we need to ignore. We bought a car with 0 emissions, we bought some computer equipment, we bought a machine, we bought some plant, we bought a car with 40%, 40 grams per kilometre. We bought some thermal insulation, and we disposed of a car. We've got to calculate the allowances for the year ended 31st of March, assuming that no short life asset has been made in respect of the computer equipment. Okay, so let's have a look at the model answer for this, because I've written them out several times so you can see how that works. So I'm just going to show you the model answer. So answer to example number 6. Again, we have a heading and we've worked out how many columns we're going to need before we start, and we've copied down from the question the 2 written down values brought forward. Now, the thermal insulation is subject to special rate written down allowances, so we've dealt with that first with regard to AIA and claimed 28%. Sorry, 28,000, not 28%, sorry, 28,000. And then we've then got our assets qualifying for AIA for the main pool, and we have listed those. They've come from the question. Now, you could technically, because all of these come to less than £1 million. So technically speaking, you could have added them all up and put them all in together. But separating them out like that shows that you understand the principle that you want to use it against the special rate pool assets first. It just gets you a little bit of extra confidence from the marker. So we've listed all the assets and claimed 100% AIA, put that in the end column with the allowances. Our other additions, there's a car and a disposal of the business use car. So the main pool has an 18%. That's the main pool. 18% goes in the end column. The balancing allowance is done in full so that this comes down to nil. But we can only claim 80%. So obviously that is what we've claimed in the end column. And then we have a special car, the 0 emissions car, we can claim 100% on. Add everything up, finish your computation off, and make sure that it looks nice and neat and well finished. Okay, so let's go back now to the main part of the chapter. So the next part of the chapter is talking about the structures and buildings allowance. Now this is new. It was introduced in 2020 and is now part of the TX exam, and it's only on buildings that were constructed on or after the 6th of April 2020. For individuals, and for companies it's the 1st of April 2020. Now it's an annual allowance, a written down allowance of 3%. Now this is different, it's not a reducing balance, this is a straight line basis. So total relief is given over 33 years and 4 months. The qualifying building must be a factory, a warehouse or an office, wholesale or retail properties. Includes walls, tunnels and bridges. This is what it does not include, so make sure that when you come across this in a question that you don't give the allowance on certain things. So if it's not a dwelling house, you can't have it on land, on the fees, on planning permission, and obviously plant and machinery, because that would be part of the capital allowances computation. So when an unused building is bought by a developer, the price paid, excluding the land, is eligible for SBA from the time that the property is brought into qualifying use, such as its use within letting or trade. It says that if a building is only brought into such use partway through an accounting period, you'll have to time apportion it. I'm not sure you'll get one of those, but just be aware that that is the case. If a question states you're dealing with the purchase of a building rather than the construction of a building, then no SBA will be available unless the question explicitly states that it is able to be claimed. So I have an illustration here for you. This is unlikely to come up as a main question. It's going to be a small question if you're going to get one. So a trader prepares accounts to the 31st of March each year, and on the 31st of October 23 bought a new warehouse from the builder at a cost of $240,000, which included land of $90,000, which, if you remember rightly, we cannot claim for. The warehouse was unused until the 1st of January. The qualifying expenditure, obviously of only $150,000, and the 3% SBA will be available from the 1st of January. So it will be, this is the 150 times 3% for 3 months only, 1125 will be available, and then from then on you'll be able to claim the whole amount of £4,500. When you dispose of a building, the allowances that have been claimed are effectively clawed back by adding them to the sale proceeds in order to determine the chargeable gain or allowable loss, which we'll see when we do capital gains. No balancing allowances, no balancing charges. And the purchaser will then simply continue to claim that 3%. Very small portion of the exam, more likely to be a multiple choice question than anything else. Now, capital allowances always appears in the TX exam. Now, it could be tested as a multiple choice question. So these two here are simple multiple choice questions that I've put here. Practice those within your tax manuals from BPP and or your revision kits. So multiple choice: Precious prepared accounts for the 8 months to the 31st of March 24. The written down allowance at the 1st of April was $18,000, and then she bought a zero emissions car costing $12,260, used only for business purposes. What's the maximum capital allowances that she can claim? Okay, so we have this, which is 18%, but only for 8/12 of the year, which is 2,160. And this here, she can also claim in full. It is not time apportioned, so that's important to see that. So the maximum that she can claim is 14,420. And again, you might get an A, B, C, D, and you've got to choose which one that you want to pick, and or you'll get a box, and then you've got to write that figure in the box. The second multiple choice question: Cora prepares accounts to the 31st of October. On the 1st of May, she bought a building, which she bought into use. These are the costs. We have land of $700,000. We have the structure and the buildings of $550,000 and the renovation costs. What's the maximum structure buildings allowance she can claim? Well, she can't claim against that anyway. No claim because it's land. Okay, structures and the buildings. Okay, she can claim 3% written down allowance. And this, the renovations. Here, again, assumptions. We are assuming that it takes place after. And therefore it would go in as an expense for a revenue expense for the revenue in the accounts. So the maximum that she could claim is 5,550,000 at 3% is the maximum that she could claim. So those are the kind of multiple choice questions you might get. However, it's more likely to come up as a full computation. They will ask you this because sole trader, partnership, limited company, it can come up as any of these. So learn the pro forma, use the tax tables, and never guess. And use, it says there, a thoughtful, logical approach, and make sure everything is well labelled and easily understood. So moving on then, let's be aware of dates, when they were bought, when they were sold. And we have an example here of an exam style question, which is what we're going to finish on now. 30th of June, she was employed as a management consultant with an annual salary 40,000. Then on the 1st of July, she commenced self-employed running a music recording studio. And this information relates to her self-employment. So there was adjusted profit. Somebody's done that for us of 89,000. This figure is before taking account of capital allowances. So they're clearly giving you instructions here as to what you need to do. Somebody's done that for you, just having to do the capital allowances underneath. And then she bought the following equipment: some recording equipment, some capital allowances for we've got a car for CO2 emissions of 70 grams, which she uses. So that's going to be a private use asset. The recording equipment, plant and machinery. We claim AIA on that one. I would think we probably could. Again, if it's used privately by the employee, you ignore that private use because that individual will be taxed using the benefit system. And then we've got a computer. Now, the question asks us not to work out the capital allowances, but it asks us to work out the income tax computation. So she's got employment income. She's got trade income, from which we will then deduct the capital allowance, which will be a working. We will then have a personal allowance, which we will need to deduct. And that figure will then be taxed. If you have not looked at the chapter on income tax and how to work that out, this won't make any sense to you. So it is important that you watch these and listen to these and work through these in the order in which they are prepared, because they are prepared in a logical order. So we started with the income tax computation so that then you would know how to work it out. And then we're looking at sections of that income tax computation to be able to bring them all back together. So there are multiple parts to this question. So let's have a look what it looks like in the model answer, shall we? So in the model answer, you'll notice that I've started the model answer with the income tax computation for 23-24, because that's what the examiner asked you to do. So set up the pro forma before you do the calculations. So that was copied from the question and obviously prorated. Dates, make sure you read the question carefully. Read the question carefully. Take it slow read it again, read it a third time, make sure that you have got that correct. Then they have adjusted the trade profits for capital allowances, deducted the personal allowance. So you can copy that in, you can write that in and leave this bit here blank. You can write that in and then go and do your workings. Leave space for your tax calculation and then there's your workings. That's from the question. And again, workings clearly labelled. So let's have a look at the capital allowances computation and how they've done that. We have it all new, so there's nothing brought forward. The recording equipment and the computer, we're going to get a full AIA on. So that's AIA in full. Then we put the 2 cars in according to their CO2 emissions. And obviously this is a private use. Be worthwhile writing that percentage down so that you make sure that you've got all the information from your question in your answer. We work out, again, pro-ratering. They will give you this in the exam, so make sure that you check and recheck that you've got it correct. 18% on the main pool, 6% on the car, because if it hadn't been a private use asset, it would have gone in the special rate pool. So at the end of the day, that is the capital allowances claim, 34,404. Again, it's got brackets around it, so you will then deduct that, giving you a total of 54,596, which you will then put in there. So adjust the profits, that's been done for you. Work out the capital allowances, put that with the adjusted profits. You could either do it separately like that or put it in the main computation. Deduct the personal allowances and then we're going to tax that. So 52,000. So check the rates. The first 37,700 is taxed at 20%. The balance of that income is then taxed at high rate. So that's basic rate and that's high rate. And that is the answer to our question.